I cannot code, yet yesterday I built a bot that runs 24/7 on one of Hyperliquid's most inefficient markets and continuously makes trades all day autonomously. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. All right, guys, before we get into the actual bot and how it works, I'm just going to quickly go through the process, right? Because the process is probably the most important thing. Now, I can't code, but the fact that I saw this market had like a discrepancy in it meant that now, with the incredible advent of like AI, right, I can just go and talk stupid to my computer. I can literally talk like idiot to it, and it can understand me, which is mental. If you want me to go through a full kind of guide as to how to exactly set this stuff up, like how to do it in Claude Code and stuff, just leave a comment and I can probably do that full walkthrough. It'd be a much longer show, probably take 30, maybe even 40 minutes to do the full walkthrough. Just going to cover this in maybe, 6 or 7 minutes. So hopefully this show isn't too long. This is the process, right? So I saw the market launch. I watched it for a day or two, and I saw that it wasn't really moving in line with what I would expect. After that, I kind of got a hypothesis, and then I used, obviously, Claude to go and do the research for this hypothesis. And then I got Claude to go and build the bot. And then this was all done in natural language, right? And once I'd built the bot, I just tested it, iterated with it, and now it's running in the background. And it's kind of wild how effective it's been. And it was only because of this, right? So these markets, when they launch, any market across all of DeFi is inefficient at the start, very inefficient. And this is why Hyperliquid's been so successful, right? Because it's garnered so much liquidity, and now it is so efficient, people can use it as their legitimate trading platform. It's getting like recognition at Bloomberg and whatever else, because it's got deep liquidity. But these other markets, these newer markets on Hyperliquid, are not very efficient. And I'm going to show you again exactly why that is. But here's some sort of things to look out for, right? If the open interest is low-ish, it's probably quite inefficient. If there's not enormous daily volume, it's probably relatively inefficient. If there's no volume, then there's no gap to be made, right? So there's no point trading in a market that has no volume, because if you're trading against, you'd be trading against yourself, there'd be no edge. And prediction bets, which is what, Hyperliquid's new HIP-4, they're just outcome bets. So you're betting on the outcome of something happening, same as Polymarket, same as 𝗘𝗃, etc. Here's an example, will Bitcoin be above or below 79.5K tomorrow? There's a 65% chance of yes, there's a 35% chance of no. And that's literally how you buy them. 65 cents will buy you 1 share of yes, 35 cents will buy 1 share of no. And of course, if the no share ends up being right, that 35 cents is now worth $1, and vice versa. If that yes share is right, that 65 cents is now worth $1. And of course, if that yes share is wrong, then that 65 cents is now worth no dollars. Okay, so it's probably easier to just show you outright what I'm talking about. I'm looking at 2 markets here, really, because it's the 2 markets interacting that I think is where I saw the edge. And I think these kinds of edges are going to be quite common, actually, which is what I mentioned earlier, along these HIP-4 markets. And so all I'm looking at here is Bitcoin price and whether or not Bitcoin's going to be higher or lower tomorrow. And what you can see is that this on the 5-minute time frame. Like, obviously Bitcoin's volatile. Obviously Bitcoin's volatile. We know Bitcoin's volatile. But Bitcoin's volatile all the time. So when it goes up $100, down $100, it's just as likely to go up $200 and down $200, in the next hour. But this 24-hour market is really volatile. It reacts a lot. At just 8 a.m. this morning, there was a 55% chance Bitcoin was going to be higher tomorrow. And then by 1:30, it was only a 30% chance. And then it swung back to 50, and, now it's down to 40. But you can see, if we take this as the 50% line in the middle here, look, spend some time above the line, spend some time below the line, converges back towards the line at some point. This is pretty common. This is what you would expect. But the market isn't really pricing it such that it expects it to revert to the mean very well, which is why there's an inefficiency, or why I thought there was an inefficiency. So I looked into it and I thought, okay, is this just me not understanding Bitcoin's actual volatility? What we needed to find out was what I was seeing actually real? Because it looked like when Bitcoin went up like $100, $200, the percentage chance of it being up or down the next day was moving too much. But, it's hard to quantify that. So when I went away and did the research on this, what I found out is that if Bitcoin moves $100 or $200 or $500, those moves are so typical that any move in that of that amount in that direction doesn't really tell you where Bitcoin's going to be at the end of the day. It's not much more than a coin flip, really. And so it was quite clear that these HIP-4 markets, or this up-down market, was overpricing early moves. It was indexing a 100 move in Bitcoin, a $200 move in Bitcoin, as increasing the chance that Bitcoin was going to be higher tomorrow by way more than it should have been. It should have been still pretty close to a 50-50 split, but really it was more like a 60-40 split once Bitcoin had moved a few $100s, which was clearly way too high. And this data just shows you again that basically movements inside the first 4 hours are largely noise. They need to be really, really big for it to be actual informative information, which makes sense, right? Because 24 hours is a long time. What happens in the first 4 hours doesn't really predict what's going to happen in the next 20. So kind of makes sense. And this actually meant that a lot of the times the prices that were coming through from those markets were not correct. The market might be saying there's a 65% chance, but really the research was saying it was more like a 55 to 60% chance. So there was a small amount of edge in that bet. And so I went away, obviously built the bot, again, just in natural language. And all I said to Claude was like, it gave it the research and said, okay, now go and build this bot. And it comes back and it's like, okay, let's run this thing every 15 seconds. What's Bitcoin doing? What's the market doing? What's the percentage chance it's up or down? What's the Bitcoin price? And most of the time it's just doing nothing. And then every now and then it realizes there's a 5 cent maybe kind of like position that's not right. And it enters that position and then it closes it once it's back to the right level. Now, sometimes it stays the wrong level for a while. These trades sometimes go underwater. There's still like stop losses and all that sort of stuff built in. So sometimes the bot still suffers losses, but fundamentally the bot made 50% inside the first day. And this is what I want you to take away from this. I'm not saying you should go and make this bot, right? There's a few things that I am actually saying. First thing actually is that these Hyperliquid improvement protocol, these HIP-4 markets, there's going to be lots more of them. They're going to start very inefficient. Now this one is more efficient today than it was yesterday. So the edge is in being early. And these markets are being spun up all the time. Now there's 2 of these markets. Probably in a month's time there's going to be, a handful, and in 6 months there might be a bunch of relatively inefficient markets. And not only that, but the fees at the moment are free. So it means obviously it's much cheaper to trade on these things. And the third thing is that there's still a chance Hyperliquid would do some form of airdrop to users. They still have like 30% of the supply that's earmarked for the community, future rewards, etc. Obviously no guarantees on anything, but those tokens are either going to be burnt or distributed in some way. And if they're distributed in some way, you would imagine Hyperliquid gives them to users of the platform. And I would probably bet, just by nature of wanting to decentralize the network further, they probably are more likely to give it to users of innovative products rather than just the perps users again. They probably do give a disproportionate amount to people on the Hyper EVM, for example, people using the HIP-3 market, people using the HIP-4 markets. And if we just look to it one more time, like Bitcoin's traded in like a 1.6% range, yet this HIP-4 market has traded in a 109% range. And so there's just an enormous amount of variance in these markets. And I think learning how to go away and capture the inefficiencies is a really invaluable tool. And so the point is, building bots now is incredibly easy. People can just describe what they want in natural language. They can then iterate and go back and forth and then run the thing just on their local machine. They haven't even necessarily got to get a VPS. Now, as I said, I can do a full walkthrough of how to do all of this, but the most important thing, I think, is not copying, pasting one person's piece of code, because especially in these inefficient markets, it gets outdated very, very quickly. Iterations have to be done consistently, and you have to be quite manual, making sure the bot is being taken care of, overseeing the bot. If someone decides to use an inefficient market and then just leaves that bot for like, a day or two, there's a good chance when they come back, they're going to have no money left, because the bot needs surveillance. It needs to you can have fail-safes and stuff built in, but it certainly should have fail-safes built into it, but it does need consistent surveillance. So before I go, guys, I just want to talk about today's sponsor, MetaMask. So MetaMask are essentially building infrastructure for never needing to like come off crypto rails, which is awesome, right? So they've got places to trade, integrations to Polymarket and Hyperliquid. Obviously, these outcome markets are now there as well. You can basically do everything you ever want to do on-chain with MetaMask. And if you're traveling as well, MetaMask have this incredible card now. I'm going to do a full guided walkthrough of the card actually, but this card gives you discount and cashback at some of the most incredible hotels all over the world. You're talking like 60% off the normal price. So absolutely incredible. Thank you so much to MetaMask for sponsoring the show. Thank you guys so much for watching. I shall see you in the next one.